Hello, Vorians Worldwide. Steve Vetterl, your CMA. I'd like to view myself as the risk manager. Welcome to the midweek software strategy session. We go through what's going on and all the fun stuff that surrounds the markets. Today is the 11th, starting this a little bit late. Somebody hijacked my Zoom room, so we have commandeered it back. I want to make sure everybody can see my screen, see the risk disclosure before we go through this real quick. Let's do a sound check if we could, please. Hopefully, we are all back in session. So the Q&A window is open. If you guys want to put some questions in, go through the risk disclosure real quick. Trading the foreign exchange markets carries high risk and may not be suitable for all investors. Trading on margin and utilizing leverage can carry an even higher level of risk that could lead to a complete loss of investment funds. So before deciding to put very important live money to work, make sure you understand the risks associated with the market. We do not want to see you blow your accounts out. So if you are sharing any of your results using Alexander, Iris, or Einstein, or any of the other new Force softwares, please do not use the term company recommended settings, okay? We are not recommending settings as a company. I am. They're not a financial advisor. I am. Auvoria Prime licensed software the users can use however they want it at their own risk and direction. Some software does come with default settings upon initial setup, which users have the ability to customize their settings however they want. Do understand the risks that come with that, though. Auvoria has nothing to do with the customer's brokerage account. We don't solicit or take trades. We don't manage money. We don't recommend any brokers. You can certainly learn about some great brokers from your downline folks. We just license software and sell amazing education that users can learn and potentially benefit from. And that is more than just myself now. We have Susan, we have Daysaid, we have all the really good stuff that's put together in the back office and the stuff coming that we're working on as far as the onboarding. So my settings are not company recommended settings. So let's take a quick look at Forex calendar. I'm going to go through this stuff pretty fast. It's going to be a bit redundant from Saturday. Let's switch over to the screen. For anybody that's new to Auvoria, welcome. I do these calls on Tuesday and Saturday at 10 a.m. Pacific time here in sunny wine country of Temecula, which is northern San Diego. And let's take a look at the calendar. So I typically filter out low impact news events because they're not as important. The red folder stuff is important. As I mentioned on Saturday, today, essentially we have some NZD stuff coming out. You're looking at everything via New York time or Eastern time zone as far as these news stories. And nothing is much this week. I don't really look at CPI as being something really big. The core retail sales, which is on Friday, you know, they're expected to be absolutely horrid. I mean, I don't think this surprises anybody at this point. So not sure how an impact that's going to make. And got an email from a customer down under that asked me about, you know, why are the markets hitting all-time highs? And a lot of that has to do with, very simply, a lot of the central banks around the world have come up with new bailout plans to essentially bail the countries out. Typically, when you have money provided in terms of printing, it gets typically dropped into capital accounts first, which essentially is just equities. So I had a comment also, if you guys want my trading trade tracker with Steve Vetterl, my Telegram channel, I would highly advise getting subscribed to that. I put on, because I know to give you guys sort of a feel of just a broader comments that I usually will make to my clients via an automated system we do for emails. It's kind of like a weekly newsletter, if you will. I posted it on my channel if you guys want to take a look at it. All right, so that's that. Let's take a look at what's going on in the marketplace. For a couple that asked me the question, I always start off with just a quick chart of the SPX. Seems like everything is running with delays today, I'll tell you. Can't get a chart to switch over on trading view either. All right, so let's go look at this stuff in FX book. Seem to be technologically challenged today. All right, so this is, I always start off showing the conservative account. This is the large euro denominated account that we trade. This has Einstein running on it all the time. The account's actually gotten back a good bunch of a drawdown. That it's still in drawdown with some active trades that it has on right now to the tune of about 500 euros, but it's starting to climb back out of a little bit of a dip that the account took. We've been running the account since the end of the first quarter. We switched it at the end of May to the high volatility settings, which essentially is just flip-flopping the couple of, I have that all detailed on my channel. I don't want to get into a lot of that today. I wanted to really just take some time and go through some Q&A. Not really seeing as far as markets this week. If we can get unfrozen in trading view here. Let's see if we do a refresh. All right, so let's go back. And relog back into this. There we go. Just sometimes you get frozen out of trading view. I gotta remember that. I was looking at this a few hours ago. Right, so let's take a look at the euro US dollar. Here we go. So this is a daily chart. For those of you that haven't been visiting me on the 10 a.m. calls that we have the last couple of weeks, we broke from a pretty good cup with handle pattern. It's actually a very common trading pattern that's taken in. We absolutely just bolted out of that pattern. And if you take a look at, let me just show you this layout. Take a look at that pattern. We broke out of that pattern on the daily and went up to an area. If you look at the weekly chart here, whole 1900 area became a magnet, which is pretty decent resistance level at this point. So I'm kind of talking about, this is just a weekly chart, so each one of these candles represents 1 week, but talking about when we hit that point, probably going to go back up and test it again, which we have done now twice in the last 2 weeks, and essentially putting in now a tighter pattern that I expected us to essentially just base or spend some time building out a smaller range. The concern really is that with some of the targets that I have down, essentially not is necessarily visible. If you're looking at just the dollar here, you have to actually go to a monthly chart to see how more than likely the 85 area is going to become a magnet for this, which is going to, in my opinion, at some point, probably test down first around 90. Not sure how quick, when we're going to hit that. But just understand, if we do get down to this level, it's going to be just a continued extension of a move that surprised a lot of people. There was a lot of institutions that were essentially betting on the dollar, not short. Conversely, the opposite being the case for every currency that is attached to the US dollar has seen a pretty decent lift. And it's a little more prevalent looking at, essentially the last 12 years here on a chart, which is a monthly chart. And I always want to look back because you're going to look to see essentially where there are other moves that stopped or so forth. But, I'm targeting right in the 125 area right now for the euro to go up. Right in this whole 20-ish to 25. It's a big area before it broke And then notice when we came back up to this area was offered a pretty serious level of resistance, with this being the 200-day moving average as well. So acting more as a magnet, which is a green line, to this area. So what's that mean? That means that if we continue in some sort of trend up to that area, the trending types of EAs, which just stands for expert advisors, nothing more than MT4's name for the algo, that is Einstein and Alexander and some of the others. It is, as far as the software is concerned, it's tough to have any kind of martingale strategy running, in my opinion, during a period like this. It's really best, in my opinion, to have a trending based algo chasing after these rips higher. Just makes it a lot easier for the trades. So let's look at GBP USD. So back to a weekly chart. Notice I typically will start with the daily, right? Kind of see what's going on, see where. Notice, and not a surprise, this whole 132 areas, it's definitely been some resistance for us. But then again, dollar's sort of stabilized out, trading around 93.50. I think that this week there's a potential probably for markets to cool out and do a little bit of sideways trading, or like to call a basing pattern built out. Do note that if I think that a couple of these other bailout packages, I know a few countries are looking at, certainly the first eye here is on the U.S., that probably could be a sell event for the euro once that's signed, lifting the dollar a little bit. So I think it's a bit oversold, but ideally still thinking that most importantly, that 85 area. And I got a question the other day asked me, I didn't answer because I didn't get time. We didn't have time in the presentation. Why is why spend so much time on the US dollar and the euro? It's because we're about 30% of the volume is executed in Forex. It is the number one major. So, and oftentimes the dollar can wag around all the other currencies depending on whether it's been strong or weak. Ideally, what I'm trying to teach to everybody here, besides just going through news stories and how that can impact it, I'm really trying to instill a little bit of knowledge on technical analysis. Keep it. If you don't want to get into this, I understand that. You're more than just welcome to listen to the calls. But I think hopefully over time, maybe a little bit of osmosis of what I teach, sprinkled down on the subscriber base here will help you guys understand the relationship between different types of currency to the money supply, to any type of legislative decisions coming out of countries. I think it's important to understand that, because there may be a time when Alexander's spitting off a whole bunch of trade notifications. You've taken a closer look at the charts. You're like, hey, this thing's just absolutely ripping up to the sky, especially in the case of the GBP USD or euro. And maybe you wouldn't be accepting the shorts, right? Maybe you'd just be accepting all the longs that's set up while the currency is moving up and down. So at the end of the day, it's just going to help you in terms of understanding that. Just I want to note here. Let's take a look at USD JPY. Then our least favorite currency. Do note of this one with the Euro JPY. We're going to need to take a look at a weekly chart. This one's not necessarily as clear, but you can see that we've just lifted above the 200-day. A lot of times when that happens, especially if this candle of this weekly move above this area actually holds, a lot of times it can trigger a lot of stops, in which case sending this currency higher. I think the problem with forecasting anything in the Euro JPY land is that this has been very unpredictable. It's been very difficult to forecast. So a lot of people say, well, what, should I turn it off? Keep in mind, this was one of the more profitable currency pairs last year, especially in terms of, the early versions of, Einstein and Alexander. This actually did pretty well. it accounted for almost 2/3 of the profit last year. So even though it's not acting as it should, in my opinion, at least as far as a martingale strategy, I still think it's something we want to just keep an eye on. But I really don't, and I can't blame anybody for sort of turning off that third pair, because I always get the question, well, if I'm going to get rid of the Euro JPY in terms of diversification, what should the currency be put in there to replace it? And the problem I have with, essentially, in my opinion, when you take it out, it's kind of like a broken ring. So, because you're really going to reap the benefits, or what I often call pin action, off the moves of primarily the US dollar right now lower, sending the vast majority of the pairs tied directly to that much higher. And essentially the pairs that are tied to those pairs, sort of a tertiary level, if you will, they have dropped in value as they've lifted as well. So it's sort of rippling through the whole currency markets right now if you just want to take like just a big macro look at it. Now, this is the US 30. I'm not sure if a lot of people understand kind of what this is, but on the MT4 platform, Alexander & Einstein can trade the US 30. There are settings out there that have been shown to me recently, and it's had a much better time trading it. I haven't looked that close into it. If anybody wants to share my FX book of either Alexander or Einstein trading US 30 on maybe some more conservative settings for a much longer period of time, I'd be happy to look at it. Send me an email. Here's the email. Type it in the room right now. Get into the questions here while I'm typing this. Make sure if you ever send me an email, I get that right. It's auvoria.com. Yeah. So I don't have the settings for US 30. I'm going to be presented them. I'm going to take a closer look at them. It's just essentially, and the cool thing about this is trading US 30. You could just trade US 30, right? You don't have to necessarily trade a ring. And it's just an additional piece or additional instruments you can trade using the software. So I've seen actually really a lot of positive stuff about it, but it seems like every time I slightly go off the paved road with some additional settings or choices for you guys, I'm told to come back on the road. That's not going to work. So I think there's been a lot of opinions flying around, and I'm only presenting different settings to you guys after I've looked at it myself for a long period of time with a lot of data. So that's essentially what the role of a risk manager is to help sort through the absolute maze of different settings out there for all the softwares we have, and some of the new ones coming out. It determines which ones are the most effective, which ones are the most conservative ones wants to be that way, versus which ones are the most aggressive. So if you're fairly new to these calls, that's primarily what my role is. The problem with that is that regardless of how good one is at understanding all the risk related to these moves have been whacked out. They've been crazy. Many of them, especially in GBP and ZD, have gone way past where one would think the market gets real stretched in terms of these crazy movements up and down. And it has just absolutely wreaked havoc on accounts. Not the ones that had high volatility settings, but it certainly has wreaked havoc on accounts that have much more aggressive settings, especially anything with a lower than 1 day time frame that they're trading on. And certainly a lot of the scalp-based, what they call speed scalpers, essentially on anywhere between 15 to 5 down to a 1 minute time frame. If you do not have conservative settings lined up, I mean, the markets are really going against you. I mean, it will blow these accounts out. So I caution everybody on that. All right. Okay, so this is actually an important question. First, I'm going to start with, it says, what settings should I use for a 400 to 500 hour account in Einstein? I'm going to try and talk you out of that. Ideally, this for a live account, I mean, again, you're welcome to run this a demo for whatever size you want. But on a live account, you really don't want to start with a higher dollar amount there. closer to $1,000 to $2,000. And for the person that asked that question, I would highly suggest you go into the back office. I have a whole sheet. I actually think there's one way back in the very beginning of my Telegram channel where I detail what the account size should be. I see if I'm running Einstein this week with settings you showed us last week. I've noticed that it has a negative effect on my profits. What adjustments can be made on the settings of a 5K account so that my risk is still low? But Einstein is maybe making some more profits. Will it, for instance, help if I put my MA back to 20? Or maybe I set the range levels to 25? Well, I mean, you always can take the range levels up to 25 or 30 or 35. Just understand that it's just going to take less trades, okay? And, you know, that kind of corresponds to another type of software that you guys may have seen in the announcement by corporate. Really, in my opinion, should be viewed by everybody several times because you can watch the developers get into it. But Gearbox allows you essentially to set different gears so that you take much higher levels in the sequence, okay? So which alleviates you having to chase, you know, moving it from 20 to 25 or 35, you know? But I mean, the most conservative settings that I've seen in terms of the range between levels is up around 35. The problem with that setting is it doesn't take a lot of trades. If you're okay with that, but it is super conservative. By the way, the moving average, stay tuned on that one because I've got some new data I'm going to take a closer look at. To the next question. Shall adjust the range levels smaller since moving entire. That's kind of a dangerous thing, Elizabeth, which she asked, shall adjust the range levels, essentially, should she adjust the range level smaller since it's moving in a tighter range, like dropping it down? If you had it at a 35 to a 25 or a 20, you can do that, but we're in a tighter range right now. Anything could come out in the news globally to send the dollar much lower or even higher, which would probably be against most of the grain right now, right? What does the market typically want to do long term is it wants to bankrupt everybody. I know that sounds harsh, but that's essentially what markets' goals primarily are, is to do what everybody thinks is not going to happen. So it'll oftentimes do what's not priced in. I know this is a hard thing to say. So it's basically if everybody out there, you know, says, hey, Apple Computer is going to $1,000 a share, and it makes the front cover of Time magazine, and it's just a very well known, you'd think that, you know, the stock would just get that much more. And the problem is if it's a known or a priced in piece of information, a lot of times the current price of whatever the instrument is, piece of real estate or whatever, has hit its perfect price. More than likely it's going to do something different than what the masses are teaching. So this is the tough concept that I'm going to talk a little bit about in the psychology video that I'm shooting for our onboarding video start and grid that we're building out right now. When somebody comes a new subscriber on, essentially they're going to be taken through a whole series of great stuff where different directors, different leaders, so forth, different coaches actually speak about the most important things. I think one of the most important things that most people just don't pay attention to, and it is frankly the largest reason that a person's account gets blown out, is because, one, they don't have proper risk control measures in place. I see it constantly. Hell, we've seen it in our group. And, you know, we rule the settings in our group, you know, among all of our team names, which is our teams are run by other people, not by me, but, you know, we basically are in the ear of all of our team leaders and our subscribers to make sure they have the settings right. But we still have, you know, some that they're not paying attention. So what I always say is, you know, if you're going to do something good for your team for the day, a single best thing you can is make sure that they've run demo accounts first before maybe they want to switch the license over to a live account, or maybe get an additional license for a live account. But just make sure that they've gone through a lot of these settings videos, the onboarding, and all of that. We're still finding just too high a percentages of subscribers that have not gone through a proper understanding of what is Forex, what's a pip, how do the markets operate. You don't have to be an expert in this, especially looking at charts. You don't have to read them to the degree I do, but I think it would certainly behoove everybody from a risk standpoint to get a little more educated on that. Well, that's good. So I haven't paid enough attention to this. So if Einstein, is trading trends since yesterday, that's cool. Hopefully it continues that. Now watch, it'll start trading trend and the market will just be basic. Okay, let's take a look at these other questions. What is JPY doing this week? I'm not sure if you saw the JPY discussion. This is Euro JPY right here. Just a first peak since 2019 on a weekly chart above the 200. So if we can close this candle, here, let me make this bigger. If we can close this candle out for the week above this level, probably could be some stops that get hit. It's typically institutions will swing trade stuff, but they'll position stops above the 200-day on both the weekly and monthly charts for the longer-term funds. The issue with this, and really the issue with anything that is somewhat tied to something else that's tied to the U.S. dollar, I know that seems strange. Everybody's watching this right now. This is what everybody's watching. Gold, metals, commodities, everybody's watching this chart right now, because the continued drop in this stuff really benefits a lot of other stuff very positively, especially the metal space. So I'm starting where I didn't pay as much attention to it in the past. I just look right at the S&P at the beginning of the day, right, and then just start going through other indices around the world. Now I started off by looking at the dollar, see where this is going in relation to certainly the Euro USD, because I think this is kind of leading around a lot of other stuff, obviously, but even outside of Forex, not necessarily equity markets. Okay, currencies occasionally will wag the tail of an equity market, but right now the equity markets are fully pricing in. Just drop it back on a daily chart for this one. And by the way, just as a side note, these black lines here, because there's been a question on that, the black lines they represent support and resistance areas. So we've busted above it now. Essentially, we're shooting for a high now on the S&P here in the U.S. This is just the 500 largest company by capitalization in the U.S. And it includes all the big names you guys see around the world: Facebook, Amazon, Google, Netflix, Apple, Microsoft, stuff like that. All right. Next question. I am a newbie and keen in learning. Good to hear. I have hedging on, but at level 100, so actually it won't hedge, right? Guess the question, let me ask you this. Why the level 100? Why did you choose that? If you want to put that answer in. Let me just get into the accounts here in MT4. I was having trouble logging into these earlier. Let's go ahead and get in okay now. If you guys don't know what this process is, just connecting to your VPS. Let's see what's going on with the MT4 platform. All right, so okay, so I'm assuming you're talking about the must hedge positions before using dual sequence. Is that correct? Okay. I mean, you could certainly turn that off. I have a, if you guys go on my Telegram channel, I have a, I'm not going to go through the whole thing right here, but just go to the Telegram channel. I have a huge paragraph on hedging positions before using dual sequences. And it'll answer a lot of those questions. It's a fairly long read, but it really dives down deep. what pairs would you advise to trade this week on, say, a $600 account? If this is a $600 live account, I would not be using it to trade Einstein or Alexander. Sorry. I would either use Gearbox or Variable, the two new pieces of software that are coming out. Something they could trade a smaller account. And that's one of the reasons that we've been courting and entertaining other developers with other pieces and completely different types of algos, essentially to trade smaller accounts. And many of these, especially Variable, have been exceptionally successful trading smaller accounts. I mean, even to my surprise. The software was written to a certain degree by the developers, and one of the important components is that it could trade smaller accounts. Got to build that deep product breadth bench, right? One of the questions I got about was trailing equity. So kind of sound like a broken record here, but trailing equity, you can double click inside here and you can choose to set a weekly goal. So if you set a fixed weekly goal, just click OK and it changes your goal. So, but if your fixed weekly goal is 3%, this line is now active once you've chosen this, and the 4 lines below it are not active. Okay. So once you choose trailing equity, okay, this particular line below it becomes inoperable, but the 4 lines below it become operable. Essentially, trailing equity is if your count goes up 2%, and then it starts essentially putting what I like to call the security guard inside the software, or the protection factor gets activated. Once the account goes up 2%, it will protect it by a factor of 1. So if it falls back to 1, it closes out the trades. You can change these around to anywhere you want. I often get questions, well, why wouldn't I just set this at like 7 or 8? Well, I mean, what if the account never gets up that high and then just all of a sudden, loses all its profit for the week and goes into drawdown, which we've certainly seen? Wouldn't you rather have just like a smaller goal of 1 or 1.5 or 2% get met for the week? Keep in mind, guys, I know I haven't talked about this a lot recently, but I certainly did way back in the beginning in March. 1% a week on your money is like an absolutely killer return. It's basically 50% on your money in a year. Institutions would kill to hire emerging managers that got those kind of numbers. It's bananas in long-term performance. 1% a week. So I get a lot of people like, well, 1% on $500, I'm not really making that much in the course of a week. Yeah, I get that. But what if you just got 1% on $100,000? Would $1,000 a week be a great return? And a lot of people will all say, yeah, of course, it'd be great, it'd be fantastic. So there you go. Think about it in terms of how it would trade a larger account. All right, so next question. Oh, yeah, you're welcome. Thank you. Alex, I have a Telegram channel. It's called Trade Tracker with Steve Vetterl. If you log into the back office of Auvoria Prime, you can see the link to it. The other question, and by the way, the questions, you guys, don't put them in the chat window. Put them in Q&A because they just like X them out. Yeah, no worries. And keep in mind with the question that was just asked about that, this is just guidelines and settings, guys. Stevie doesn't have a crystal ball. So there are weeks that I'm going to be wrong. So it happens. You have to be able to have the fortitude to plow through it, right? And we use the analogy of a child learning to walk from being a younger baby. And when they fall down, you got to help them get back up. You don't stay down, even after some really bad falls. All right. My email's in the chat, guys. don't know if you could see it or not. I've gotten a couple of questions just now on drawdown. So I think everybody that probably hasn't seen some of my previous Zoom calls probably doesn't know most of I should say 100% of the time, the advice I give somebody in drawdown is, can you afford to lose the money? Remember, if this is a demo account, guys, I'm not saying disregard it but I'm saying if this is a demo account, it really doesn't have the impact, obviously, that a live account has, especially if you're using money you can ill afford to lose, in which case I would not recommend doing that. I really wouldn't, get emotional on a demo account. And if you're really emotional on a demo account, you probably should be on a demo for a while, because if you're having a lot of emotions about the movements up or down in a demo, going live is probably going to make your head pop off. And I don't recommend that, especially if you do need the money. Critical that you recognize that. I'm actually going to be talking about that in the psychology. So I literally have gotten emails from people saying, oh my God, I just made 20%, in the last month with, these settings, and I've done this. And, I really, this is just like the greatest thing ever. And I've gotten the opposite emails. My demo's down 30%. I didn't have the settings right. And I mean, they're just going on and on and on and on about a demo. And that's telling me something, right? And it should be telling everyone on this Zoom call the same thing. If you are really an emotional person, especially if you can't afford to lose the money that you're putting on, this is going to make your head just spin. So please do yourselves a favor, know what you're getting into, and make sure at the very least that you have the high volatility settings, which we have detailed ad nauseum on our May 30th call where we introduced them. Do keep in mind also, we changed the stop loss on all of the accounts to 500 pips. Show you here, right here. Why is that back? So this right here, it's like somebody's playing games with me. So this account right here, we changed it to 500 pips and a stop loss. There we go. You just click OK and it activates it. God, I changed this last week in this account too. Why did it change back? Somebody kidding and messing with my accounts. So you have to do this on each one, by the way. All right. Can it make adjustments in the settings while Einstein is running? Does it affect its current trading process negatively? Well, I guess it depends on where it takes the trade to answer that question, but you can adjust these settings real time. Yes, there's a link to Jesse's Telegram channel in the back office as well. Yeah, I'm going to pass on the gold discussion, guys. So, actually, I'm not, because I think this needs to be said. Let's go back to gold. This is my most hated currency, or my most hated metal. We don't even own any gold. So I don't really have it in here, do I? So you guys want me to look at the GLD? GLD is the ETF that trades gold. This actually doesn't surprise me at all. Okay, so let's go back to a monthly chart, right? So this, to me, remember, this is a monthly chart. Okay, so each of these candles represent a month. We're still obviously building the August candle. Everybody and their brother on financial media, probably globally, has said gold's going to $3,500 an ounce. Okay. I've had clients call me and tell me, hey, I want to take X out of this and that. And I said, look, as soon as we break the long-term high in gold, which essentially was set, as you can see, mid 2011, okay, we set a high, haven't come back to it. We raced up to it. Obviously, this is the dollar weakness that's causing this. No surprise. Why are we racing back down? More than likely, especially if this area doesn't hold, you guys, this is going to just be what's called a pain trade. We're probably going to go back down underneath the high. So just like I mentioned earlier, when everything is one way and everybody's running the herd in the same direction, you can be willing to bet that something different is going to happen in the market. Why? Because if everybody's talking about it, it's already priced in. Something different is going to show up, which means it may not rock to 3,500. Now, if the dollar keeps dropping down, gold's going up. But right now, I think you have a number of large institutions are saying, hey, let's start terrorizing some retail traders by going in and just banging the price of gold back down. And if in fact, on at least the weekly chart, this is looking like potentially to be an island reversal, and maybe not as quite perfect of a pattern for the island reversal, but we get underneath this 78 area on GLD, could get pretty ugly for the longs. Just saying. All right, let's delete some of these. Yeah, you're welcome. Thank you. Now, stop losses we changed to 500 pips. And the reason we did that is that if we hadn't, I'll put it this way, if we had 400 to 500 pip stop losses, a lot of the drawdown in the accounts, including the big conservative Euro account we trade, as well as the 3K Live Einstein that we trade, they wouldn't have taken a lot of losses. It'd have been diminished, essentially because you're granting the software a little more latitude to trade, dig itself out. Software will dig itself out. I can promise you that. It's happened a whole bunch of times. It just takes time. David, the crypto trade question you're asking, I don't know that. I publicly was one of the, which I took a lot of flack for. I'll tell you, you always wonder on social media where I had a pretty active Twitter account at the time when Bitcoin was up around 20,000, I was out publicly saying I want to short this, which we actually did in big chunks in different accounts. I took a lot of heat for that, but I was dead right because that currency got clobbered. So if you want to peel back through all of my Twitter, you guys can actually see a lot of the timestamp stuff I said about, because I can't, just not a fan of the crypto markets. There's just too much what I call log cabin trading going on in there. It's too much risk. We're beginning to, at least with Bitcoin, build enough data now that at least you can put a period of time of volume and price action and trade aggregation in terms of price and time that it's spent in particular areas that you could begin to actually apply real technical analysis to it right now. But I don't really forecast on crypto because I don't understand the markets that well. I still think the problem with crypto, and we call it the Wild West, because essentially it's just that. There's just too many players in there that have a significant advantage over retail that just toy with you and terrorize your accounts. At some point, it'll get a little more regulated, and I'll be able to speak on it. But whatever you guys do, especially in crypto, I know a lot can get caught up in the mania. Everybody's probably got some friend that put in 10 grand in Bitcoin and turned in 120,000 bucks or whatever the number was. So it's lured in a lot of suspects. But I'll tell you, I saw a lot of millennials, especially in this area here in San Diego, just got clobbered buying into crypto because they didn't understand how to go short. They just understand how to go long. And they were in just all in at 15, 17,000, 20,000. and they just got hammered. So please be careful on that. Alex, did you get your channel question answered? Looks like you've asked it a couple times. Finding the link to the channels in the back office. Let me delete these. Yeah, good. Yeah, you're welcome. Thanks for the accolades. I love Steven Sessions. I'm always learning something new about the markets. Yeah. All right, let me, looks like we had some problems with that showing up. Let's try it again. Look like you can copy in the chat room, huh? I'll just retype it in. Yeah, you know, I don't comment on elections or polls, guys, because I don't know, and the polling is usually wrong. That I do know. So let your heart not be troubled with a lot of that stuff. The polling is usually wrong. I know that Rasmussen's one of the few that is a decent aggregator of other polls, but if you're aggregating crap, it still comes out to be crap. Does that make sense? Prime.com. So it's sfederal@auvoria.com. One thing to note, if you guys do send me an email, make sure I have an unlocked, and I stress, please make sure I have an unlocked MyFX book link that is double verified to your account. I know that is, unfortunately, these days a fairly tough task to accomplish because Lord knows I failed miserably trying to get them double verified. But send me that link if you can have that kind of luck that I haven't. And, you know, just the picture of your settings, kind of what's going on. But just know if you send that out to something that's in drawdown, you're going to get the answer from me like the following. You know, I'm unwilling to step in front of the software because I'm not smarter than it. And if you do give it time, as long as you have the correct settings, it will dig out. This could take some time. And for those of you following Jesse's stuff, I don't know if you've taken a look at it, but I'll tell you, those GBP NZD accounts that took some hits, they've dug out big. I don't know if you guys have seen that or not. Thank you, Martin. All right, so we're coming up around the top of the hour. Let's see if I missed anything here. Always seems to be tough finding the Telegram links, huh? Going through. Actually, let me take a look at this other question. So one person asked, if this bill is signed this week, how much further do you see the equity markets rise before there's another correction? Honestly, I think it's already priced in. So I keep showing gold here. Sorry for the gold haters like myself. Let's go back to the S&P. I think we're priced for perfection right now. I think it's going to be difficult. There really isn't any reason for us to be up at this level. I just don't see it. But the concern really, and the most important thing to focus on, is the DXY. So I just got a couple questions on. It's a DXY looking at it. Do note though that you really have to look all the way back at a monthly chart, be able to at least see it in enough of a window to know where more than likely this thing's headed, which could very well be the 200-day moving average, which is right down at that 85, 86 target area. It's really so actually one thing, if you guys do want to note, let me real quickly log into my Twitter account. Getting into Twitter, what I would suggest, since I've gotten a couple questions on this, I follow a lot of really smart people on Twitter. I don't follow a lot. I have a fair amount of followers, but I don't really post a lot of, like trading advice, because FINRA really limits us in the U.S. as far as getting into specifics of trading advice. Occasionally, I'll jump in the course of the year and just, give everybody a free bone, if you will. And let them know what I'm doing strategically. So back in the March, right towards the bottom of the market, as you guys may have seen, the S&P, and I actually came out publicly and said, look, this is nuts. If anybody doesn't take 20-30% of money they have sitting in cash that they don't need for a longer period of time and put it into equities, whatever form, stocks, ETFs, mutual funds, whatever the case is. And that was some exceptionally salient advice. It's brought a lot of happy clients because we just cratered. But outside of that, this is a gentleman by the name of David Hunter. He is one of the smartest guys out there. And his handle is at David H. Contrarian. I follow David. He doesn't sell research. Here he is right here. I just dropped him into chat. He's basically a retired guy that has done those that follow him a serious favor by going out and just posting every day of what's going on. This guy's an expert on metals, currencies, mostly just the majors, and commodities. And this guy's made an absolute mountain of money over his life. And following individuals like this are really what help me not have to spend ungodly amounts of hours in the course of a week doing research, right? So while I'm rolling in my car out to a client meeting, I can, just pop on a number of guys. The other gentleman, because I get asked this question a lot and I always fail to address this, which is my fault. At Tommy Thornton is the other guy. And I am trying very hard, because Tommy's a friend, to get him on a Saturday call. He's been exceptionally busy. He's got daughters in college. He's been pulled 6 different directions. This guy is just a whip smart trader that used to run a hedge fund macro desk as a trader for Millennium Partners a while back. Really, really good guy. Talks a lot about Bitcoin. For the Bitcoin guys here, I don't get into this, but he's, everything he shows is on a Bloomberg screen, which is what you're seeing here. And a lot of this isn't necessarily related to currencies. I get it. But, my goal for this is not just to have you guys trade in Forex, but to understand global markets as a whole, right? Bonds, equities, which is the same thing as stocks, credit, which is the same thing as bonds, as well as Forex. Just a better understanding of all of this is going to bring you more wealth. I promise you. Don't just limit it to Forex. Learn everything. So with that being said, I will drop the mic now. Anybody's got any questions, ask them Saturday, please. But I thank you, everybody, for tuning in to the call. Steve Federal, let your hearts not be troubled. May the trades be with you.